Well, it's officially that time of the year in America again where you get to choose how you would like to get robbed by selecting your health insurance plan. So I'm going to tell you what me and my family are doing to keep us covered, but also keep the most amount of money in our own pockets. Keep in mind, my family is generally in good health and we are not qualified for Medicare. Unfortunately, it does not work if you are qualified for Medicare. This year, we are going with the high deductible health plan, which is the Bronze 60, and pairing it with a health savings account. You don't need to know all of the differences between all plans at this point. Just keep listening. Why a high deductible option? It saves us between $300 to $1,300 a month in premiums. And you must remember that monthly premiums are dollars paid that will never end up back in your pocket. Let's play this out. Instead of paying for a pricier gold plan, where insurance companies will pay a portion of our medical bills sooner, we choose the Bronze 60 plan and save roughly $300 a month. Now we take that money and put it directly into that HSA, the health savings account that is unlocked through getting that high deductible plan. If nothing goes wrong, we get all of our preventative care visits for free, and then within 3 years, we'll have saved over $10,000 in a medical emergency fund. On top of that, these savings have a triple tax break. The HSA is pre-tax going in, it is tax-free growth if invested, and then it's tax-free withdrawals if used for medical expenses. That's unheard of. And then at age 65, you can actually freely use that as a retirement fund. It's just gonna be taxed as normal income if it's not used for medical expenses. That is literally hundreds of thousands of dollars compounded by the time that you retire that previously would have been wasted away in insurance premiums. Now, what if something goes wrong? Because that's why we have health insurance, right? For us, one of the real tests came when my son needed urgent care for falling on an exposed bolt. Gave him multiple butterfly stitches. It was $65. But now let's say it's a more costly and common accident. You break a bone or you end up in the ER and you need a CT scan or some blood work. A CT scan might run about $1,400. That's expensive. And for a high deductible plan, you'll pay every dollar until you meet your deductible. And in my case, that would be $5,800. Here's one thing I will not do. Put it on a credit card. I call the building department. I ask for their self-pay discount or their financial assistance program. And then I set up a 0 APR payment plan, which will beat all credit card companies by an absolute landslide. And then I find myself with a bill something like $200, $300 a month. Does that number sound familiar? That's the number that I would have been shilling away into premiums, and now that's going towards actual medical bills. So here's your fork in the road. Option A, you're healthy. You can afford a monthly medical bill if it occurs, but you also want to keep more money in your own pocket. So that's where I would go, the high deductible health plan with the HSA. Option B, either you expect a lot of medical visits or you just want more predictable costs, then you can go with one of those higher tiers and pay more monthly.